Hey guys, hope everyone's having a blessed day. Today we're going to look at Wu, and this man here is going to take us to the promised land. So let's check out the weekly chart. I'm going to start with the spot chart just because you have more information on here than on the perp. So Binance Spot, you could see there was a internal imbalance on the weekly that got tagged and rebalanced over here, and then immediately the order flow shifted into sell side. So the way I look at charts now is a little different than I looked at it 3 months ago, let's say. One of the things I've learned is the market will move in waves where it delivers buy side for a certain amount of time until it reaches its objective, and then it'll start delivering sell side. So here it was delivering buy side into that internal imbalance on the weekly, and then it shifted looking for these external lows right here. And the drawn liquidity was pretty clear on the way down because you had relatively equal lows here with a lot of stacked liquidity in that pool. So if you even mark out where the low formed over here, it stabbed into that weekly imbalance. So I don't really see any reason to keep pushing down. So by that logic, you fulfilled the buy side objective over here with that internal rebalance, and you fulfilled the sell side with the external liquidity rate over there. So now we're going to switch it into the perp chart, and I just want to open up a sell model that's forming. Now you're not going to see the weekly imbalance on the perp chart just because they don't have that much information, but it was basically in this range right here. So once that was taken, you got a market structure shift, and then you started respecting bearish arrays in premium. So on the way down, if you toggle into the daily, you'll see there was a daily imbalance right here. And that was one of the arrays that started to form the original consolidation before pushing down. So I talked about this before on stream, but the idea is with these Darvis boxes, you're going to get a range forming within that range where they're either accumulating or distributing with the intention of expanding either up or down depending on which side of the curve is being delivered. So in this case, you could see it expands into it, creates a ceiling, comes to the floor, taps it a few times, and then basically a lower high, taking the liquidity here, and then pushing down and breaking structure into the next expansion. And then you have basically your original consolidation, you have an accumulation here, and then this giant wick is the one that stabbed into these equal lows on the weekly chart. So this right here. The idea is if you get a really strong wick into it like this is your smart money reversal or your long-term low. So now that the sell side objective was met by taking that external liquidity, you're looking for a bottoming structure in this range and some form of a consolidation. So you can see you get your break of structure, or not really a break of structure, but a market structure shift here where you get some displacement higher. Then you start pulling back in, and I find that this a lot when you get a really big wick like this one. You know, that's an 11% wick. Typically they will fill the wick before pushing up again out of that accumulation range. So it looks to me like this is the first accumulative range over here leading into the buy side part of the curve where you're going to get some distribution in these higher boxes, taking out internal range liquidity that was built on the way down. Now, one of the other things I look for in the range is something like this where you have a short-term low, long-term low, which is usually your smart money reversal, and then a short-term low. And then you look for an accumulation and move up. So that was the original bottom, and then to the right of it, we're looking at a short-term low, intermediate term low, and I'm waiting for another short-term low to get put in somewhere in discount from this dealing range, from this low to that high. So that's where I'm looking for my entry and set up for this. Then on the buy side of the curve, you're just looking for these levels to get taken. So there's going to be a lot of buy side stops over here. There's going to be some here. There's going to be some here. And then the original consolidation, you want to see that get taken out as well. So that's the model that I'm looking at. Now here's the long. So the idea is with the take profits on the long, you're looking at these very obvious liquidity pools to get taken, and that's where you're going to be taking profits. So if you're flipping long over here after this area where they've taken out the external range, you're going to be taking profits normally at the first obvious liquidity pool right here. There's another one right here, that's TP2, and then your original consolidation will typically get wiped out at the end of an MMXM. So that's essentially where the profits are going to be taken. Now, for the entry. So I'm looking at a 4-hour entry model. You could probably break it into a 30-minute, 1 hour, 15-minute, however you decide. But for me, it's looking clearest on the 4-hour. So I've marked in a couple key levels. There's this one right here. This is a higher time frame level on the 12-hour. So if you zoom out, it's already stabbed into it once and caught a nice buyback. Here it was final consolidation before the push down. Here it tried to hold. Here it started to hold and then pushed off again, right there, right there. And that was the original high before this final push up. And even here you could see it was reactive. So that's a very price reactive key level. The second level I'm looking at is on the 4-hour. So you could see within this accumulation range that we've marked out on that market maker sell model, you have your original low here, 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 and then you have the drop in for this short-term low, which basically completed this move and then started delivering to the buy side. So the idea would be if there is a pullback here, because you could see there was a rebalance on this candle here, then I would be looking for a reclaim in this zone right here. And the reason I like this area is if you marked out your fib, so if I just fibbed from this low to this high, you could see it's in discount right there at the 50 fib. And then also I have a breaker set up over here, the last up candle that broke structure and cleared out this liquidity. So that's going to be a breaker. It was respected here, but it still might work one more time if they take this liquidity and rebalance what's left here. So it might push back into the 50 fib and then run up. So that's one area that I'm looking to enter. That would be essentially like a feeler position. And then I would be DCAing at the reclaim. So if I see a really strong buy wick happen or forming over here, then you could drop it into the 5-minute and look for, you know, a bullish engulfing candle or some kind of volume metric you use, showing that there's a lot of people absorbing, people that are puking their position, their coins are getting absorbed at this level where the reclaim should happen. So if it ends up in that zone, it's effectively going to be like an OTE entry over here. So just above, it's actually just above the 618. So I'm going to look to take a part of the position here and then another part of it here. And if it drops a little lower, but then starts building momentum up, I'll look for a 15-minute bullish array that I can jump into, like a imbalance, or maybe there's a order block forming, whatever it is, and then run it up to the very obvious highs over here. And then your TP2 is going to be these highs and so on. Now, if you want to break down the model even more, I've got two other elements within the chart showing the sell side of the curve and the buy side. So the first thing, again, there was an internal imbalance right here, and that got rejected on the way down. But also there was a 4-hour breaker overlapping with it. So this is a unicorn model. You could see your last down candle before starting to push up. So that was like a bullish order block. But on the flip side, you could see when it retraced into it around the 50 to the 618, it started to reject and push down. So that was your 4-hour breaker. And then even more, within it, you could see there was another 4-hour breaker here that got respected. So this is my strategy when I'm trying to enter longs or shorts. I'm looking for these arrays to get respected if your idea of which side of the curve you're on is correct. So that was correct, and it pushed down again. Then it formed a daily breaker. So you could see right here that last down candle that, or even you could use this larger candle would be more accurate. But even if you use this, you could see the mid got respected right there, rejected, and then pushed down, breaking structure again. And then you have a 4-hour order block again, right below. So that one green candle within this, these two displacement candles to the downside, you could see it rejected here, rejected again, and then pushed down again. And then you have a 4-hour imbalance. The mean threshold, which is the mid, got rejected here, and that was your final drop into the final external target. So that was the buy side. Sorry, that was the sell side. Now on the buy side, this is how we're targeting on the long, right? So all the engineered liquidity, all these failed swings on the way down, they're essentially going to be taken back on the buy side of this model. And what I'm doing is I'm just overlaying liquidity points. So TP1 is this pool right here of stops. And then just above it, you could see this little tiny H4 imbalance. So combining the two, you have a really strong case for it to push into here. And that would be within this liquidity arc where you could see all these weak failed swings that are going to be low resistance liquidity on the push up. So I'm looking at TP1 here, then the rest of the liquidity arc, 1, 2, these equal highs. And then there's a daily imbalance still right here in this block to that wick, plus your external range high, which was the original consolidation to get taken back. And if this plays out, this is effectively a market maker sell model to the top. So if it hits that final area over here, this is an area where it could easily reverse. But the idea is you take your final profits here. Maybe you have 10% left on the position, and just in case they go for these this liquidity pool to the upside and push up and expand out of the range. So that's how I'm going to trade this. I'm just waiting for a push into that 4-hour area of interest. Hopefully they give, and if they do, then definitely I'll be taking my limit here and then DCAing in over here. All right, guys, let me know if you have any questions.